You have heard it before. Cash is king. But guess what? Robert Kiyosaki, the legendary author of Rich Dad, Poor Dad, disagrees. He's here to reveal 6 assets that are not only better but also safer than hoarding cash under your mattress. Robert Kiyosaki is not a fan of putting all your eggs in one basket. He is all about diversification. In this video, we'll explore how spreading your investments across different assets can shield you from financial storms. Imagine waking up at 3 a.m. worrying about the safety of your cash. Not fun, right? Well, Robert Kiyosaki has a solution. Tune in to discover assets that let you sleep soundly, knowing your wealth is protected. Cash, while comforting, has a sneaky flaw: inflation. Over time, its purchasing power dwindles. Imagine your cash as a melting ice cube, gradually losing value. Assets like gold, real estate, and stocks, however, tend to appreciate or at least keep pace with inflation. They're like sturdy lifeboats in the sea of monetary erosion. Picture this. You're building a financial fortress. Cash is the moat, but it's not enough. What if the drawbridge fails? Diversifying into different assets, like adding turrets and secret passages, creates resilience. When one asset wobbles, others stand firm. Life throws curveballs, medical emergencies, car breakdowns, or unexpected job losses. Having assets, like a stash of gold coins or a rental property, provides a safety net. It's like having a secret tunnel out of trouble. Cash is a shy guest. It rarely knocks twice. But opportunities? They're like enthusiastic neighbors, always dropping by. With assets, you're ready. Want to invest in that promising startup? Done. Eyeing a beachfront property? You're on it. Owning assets brings peace. You're not just saving, you're building. It's like planting trees. You know they'll grow. Assets can be gifts to your future self and generations. Imagine your great-grandkids inheriting a vintage watch, a piece of land, or shares in a thriving company. That's wealth echoing through time. Cash is a traveler passing through. Assets are the anchors that hold your ship steady. Keep some cash. It's like pocket change for coffee dates. But let assets be your companions on this grand journey. If you've ever wondered why keeping your hard-earned cash in the bank might not be the smartest move, you're in the right place. Invest in assets that appreciate in value over time, generate passive income, and provide tax benefits. These are the 6 powerful assets that the legendary Robert Kiyosaki calls the rich dad's assets, and they are the key to building wealth and achieving financial freedom. Asset number 1, real estate. Have you ever wondered why the ultra-rich invest in real estate? Imagine a castle, a tangible asset that appreciates while you sip your morning coffee. Kiyosaki sees rental real estate as a better future store of value than dollar bills. This because real estate typically appreciates over time, growing value faster than inflation. So $500,000 property today may be worth $2 million in 30 years. Provides consistent monthly income from tenant rents, so real estate can generate cash flow to reinvest. Instead of dead cash, real estate actively generates income. Can more easily raise rents as costs and inflation increase to offset it. So real estate adapts to inflation better, cash doesn't. Has tangible value and utility that rises with population growth, unlike paper money. Land and property always have an underlying demand. Everyone needs a roof. Residential properties, apartments, condos, houses shine bright. For example, Jane turned her basement into an Airbnb suite. Now she is funding her travels. Offices, malls, warehouses, they're the cosmic hubs of business. Land doesn't vanish. It appreciates, especially near growing cities. Real estate investment trusts, like stocks but with property portfolios. Research local markets, attend open houses. Your dream home could be your first investment. Remember, even a small studio apartment can be your golden ticket. Asset number 2, God's money. Picture this: gold, silver, and platinum, shiny, timeless, and oh so precious. These metals aren't just for jewelry, they're God's money. Why? Because they've held value for centuries? When the economy wobbles, these metals stand tall. They tend to hold purchasing power better over long periods because there are limited amounts, so they resist inflation as currencies get printed into oblivion. The more dollars created, the more ounces of gold those dollars buy. They have real uses and cannot be created like paper money can. There is steady demand across industries when economies heat up. They produce no income, but precious metals incur no taxation or volatility like stocks, so they are relatively stable stores of value across generations. When fear drives markets, precious metals often rise as investors flock to stability, so they offer profitable speculation opportunities. While cash is only as valuable as the economy backing it, gold and silver have anchored purchasing power for centuries across nations. They weather stormy markets well as safe haven assets, preserving wealth safely. That's why Robert Kiyosaki believes gold, silver, and platinum are safer long-term assets than cash. Consider diversifying your portfolio with a sprinkle of gold, a dash of silver, and a pinch of platinum. Your future self will thank you. Asset number 3, dividend stocks and bonds. Unlike cash earning almost no interest, dividend stocks and bonds pay investors a consistent percentage yield on their principal. This gives them two advantages over cash. The dividend income can offset inflation consistently over decades. So while inflation may be 3 to 4% annually, quality dividend stocks historically pay 5% or higher, protecting the real value. That dividend income can be reinvested to compound gains by acquiring more shares. This enables underlying stock growth plus rising dividend payouts as the company profits grow. Cash savings cannot benefit from this compounding effect. So while plain cash in the bank gets eaten by inflation, dividend stocks and bonds provide owners two ways to resist it: direct income and compound growth. This steady compounding wealth beats idle depreciating money over long periods. That's why Kiyosaki advocates the majority of investment capital go towards income-generating assets. They inherently mitigate inflation better and shortcut the path to financial freedom. Asset number 4, cryptocurrency, Bitcoin. Kiyosaki thinks Bitcoin has a few key traits that give it an advantage over steadily inflating dollar bills. There will only ever be 21 million Bitcoin created. This fixed scarcity cannot be manipulated like the unlimited printing of new dollars. Bitcoin transactions are recorded on a decentralized public ledger, spread across thousands of nodes. This avoids central control or manipulation. As a pioneer cryptocurrency, Bitcoin benefits from name recognition and a growing track record since 2009, boosting trust. Bitcoins can be hidden or protected in ways that physical cash cannot match. This offers self-custody instead of relying on institutions. So while volatile compared to the dollar, Bitcoin's capped supply, decentralization, maturity, and security give it lasting advantages. Therefore, Kiyosaki sees Bitcoin as a better money, likely beating cash as a store of value over long time periods. Its digital gold attributes offer more enduring safety. Asset number 5, collectibles. Collectibles are items that are rare, unique, or have historical or cultural significance, such as art, antiques, coins, stamps, wine, and cars. They are better than cash because they are physical, tangible assets, unlike dollar bills, which are just paper. So they hold intrinsic value beyond nominal currency. Great collectibles are scarce yet desirable. History shows limited supply items that people covet, retain value, and often gain value. Their beauty and scarcity resist inflation. Collectibles don't pay dividends like stocks, but they also don't carry liabilities. They offer upside as appreciating assets without downside risk beyond temporary subjective value changes. Iconic collectibles become valuable partly due to prestige, yet prestige cannot be eroded by monetary policies directly. So collectibles ride above fiscal and monetary actions. So while subjective and illiquid compared to cash, treasured collectibles ride out inflationary storms. Their physical nature, scarcity, and rich history maintain worth. They offer hidden stores of value and upside that plain cash lacks, propelled only by fleeting government backing. You can buy collectibles from auctions, dealers, or online platforms. The key is to have a passion, a knowledge, and a network in the niche you choose. Asset number 6, business ownership. Businesses are one of the best assets to own because they can produce cash flow, create jobs, and benefit from tax deductions. You don't have to start your own business from scratch. You can also buy a franchise, partner with someone, or invest in someone else's business. The important thing is to own a business, not work for one. Cash is an expense that erodes from inflation and taxes. Meanwhile, businesses throw off dividends and perpetually compounding profits as long as they stay healthy. They act as cash flow engines. Businesses usually raise prices as inflation rises to preserve their income and profit margins. Cash stays stagnant while savvy businesses self-correct. They have dynamic pricing power. Ownership stake in a strong business is intrinsic equity and influence into operations. Cash just gambles on the business acumen of government and the economy through required faith in a currency. Great businesses with pricing power produce earnings over decades. Simple ownership compounds far more wealth through ups and downs than paper cash alone. Essentially, Kiyosaki knows effective businesses control their financial fate every quarter through decisions and corrections independent of external factors impacting currency. Cash is a speculation on externalities controlling currency value. Cash can multiply wealth or be radically diluted, whereas ownership equity in a fundamentally effective enterprise is self-reliant. It thus holds inherent value beyond currency volatility or government mismanagement risk. You control some destiny in business far more than with idle cash. That control equals stability and amplified returns over the long run. Ownership is king. Each of these assets has the potential to shape your financial future in unimaginable ways. Just imagine yourself achieving your dreams through these tried and tested strategies. So what are you waiting for? It's time to take action and embark on your journey towards financial freedom. Start by analyzing which of these assets resonates with you the most. Do your research, seek guidance, and take confident steps towards building your wealth empire. Thank you for joining us today on this incredible journey towards unlocking your financial freedom. Which of these assets resonates with you the most? Share your thoughts in the comments below. And if you found this video helpful, don't forget to subscribe to our channel for more valuable insights. Remember, your financial destiny is in your hands. Seize the opportunity, and let's make your dreams a reality together.